Homes Today will now project for you and I. This is an educational segment and a rather informative one as well. Speaking of information, what information do you have on jumbo loans? Here is a brief session that will enlighten us on jumbo loans. This session will be hosted by Audrey Forshey, who is a clever RE/MAX realtor as well as an advisor. Alongside her is a well-known senior loan officer by the name of Mr. Barry Filterman. Let's hear this dialogue.
Hello friends, thank you for joining us on Homes Today. My name is Audrey Forshey and I'm a RE/MAX agent in Maryland. Today we're going to talk about jumbo loans, and so we have our friend Barry Filterman, who is a senior loan officer in Maryland as well, and we're going to talk about some of the different things that you'll need to know about if you're applying for what we call a jumbo loan. So hi Barry, thank you for being here with me again. So what does the jumbo loan mean? What is the definition of a jumbo loan?
That is an excellent question because there's many definitions of what a jumbo loan is, and that's where you have to start, is defining what a jumbo loan is. Now there's something that's called conforming jumbo, and there's something that's called super jumbo, and then there's jumbo FHA, and there's jumbo VA and all that nice things. Now you also have a terminology is conforming. Have you ever heard of conforming?
Yes.
Okay, and then you have non-conforming.
Yes.
Now that simply means is a conforming loan conforms to Fannie Mae, Freddie Mac.
Okay.
And a non-conforming loan does not.
Okay.
Okay, and normally anything above what Fannie Mae and Freddie Mac's limits are is considered a non-conforming.
Okay.
Except Fannie Mae and Freddie Mac have what's called jumbo conforming.
Okay.
So you have conforming, which is let's say the 424,000.
Okay.
And then you have above the 424, which is called jumbo conforming. Now that depends on what county you live in. So where we live in Fairfax County, Montgomery County, Maryland, it's all above, like 631. It was 625, but it just changed. It could be 636, 600, but it's changed.
Okay.
So those loans are still sold to Fannie Mae and Freddie Mac.
And we live in a high cost area, and that's why it's high in our area. In some parts of the country,
Well,
it
Howard
may be
County,
lower.
for instance, it's 517.
Okay,
In
so
Arundel County, it's 517.
I see.
So it really messes things up when you're in those counties and you're trying to buy a $900,000 home.
Oh, and you can't qualify for the same kind.
And what we
Okay.
have to discuss about are the guidelines. The guidelines are all over the place with jumbo money.
Okay. So that's anything over the 424 for a Fannie Mae Freddie Mac product, right?
Yes.
And that goes up to, you said 636 about in the higher.
It was at 625. It just went up, and I for some reason I'm getting, my mind is between FHA and VA, and
Okay.
it's around there.
Okay. So when somebody is applying for a jumbo loan, is the criteria and the things that they have to go through, is it harder for them to get a loan versus a conforming loan?
Yes.
Okay.
And yes.
Yes and yes. Okay.
Yes and no.
Okay.
Jumbo loans are much harder to get.
Okay.
And that depends if it's super jumbo.
So explain to me what super jumbo is.
Let's say we're in Montgomery County.
Yes.
All right, and you're getting a $650,000 price.
Right.
And now you want to get a loan at 5% or 10% or 20%. It's easy because now you're dealing with a Fannie Mae product.
Okay.
Once you start getting above that, you have to put 20% down.
No matter what.
That's not true.
Okay. Whoops.
Yeah, you can go with a no MI loan at 10% down. You can do a first and a second type of thing, but you got to be careful because it all depends on your credit score.
Okay.
On your ratios,
okay,
on the down payment,
okay,
on reserves, and every one of these investors have different guidelines.
So if I do a super jumbo loan, how high of a sales price can I go to? Millions.
Millions.
There's no limit.
Well, certain investors have a limit. Some are 3.
Okay.
Some are $1.5 million. Down payments are larger as you go up.
Okay.
In price, but the people have a tendency to shop interest rates here, and they don't realize that these loans are the best of the best. The rates are actually better than the conforming.
Okay.
But The qualifications are much more difficult. It depends if you have investment properties. It depends on reserves. It depends on credit scores. A lot of them won't allow anything under 740. So what we need to do is educate the customer from the beginning to see what they qualify for, and not tell them that this rate here, I got this great program here, I got this interest rate for you over here, when they don't qualify for it.
I see.
So, and then every investor is different.
Okay.
So you might have one investor that'll go to a 45 ratio. You might have one that'll go to a 43 ratio. You might have one that requires 6 months reserves. You might have one that requires 12 months reserves.
So when you talk about the ratio, you're talking about your debt to income
Yes.
ratio, how much income you're having. So that 43 or 45 could be what we call a back ratio.
Or front.
It could be?
If you're debt free,
Okay.
you can have all your housing be that ratio, and that's a percentage of what your monthly income is.
Okay.
The better the rate, the stricter it's going to be for underwriting. And like I said, it's not like Fannie Mae where everyone has the same rules.
Okay.
You're dealing with individual investors in the super jumbo arena, and they all have different guidelines.
I see. So then let's say I want to buy, I'm just going to make it up, I want to buy a $3 million house. Can I buy a $3 million house with a 5% down payment?
No.
Okay. I have to do a 20% down.
Well, you might have
Maybe.
to do more, maybe 25.
Okay.
Maybe
all right.
30, depending on the investor.
Okay, all right. But if I was going to do a Fannie Mae jumbo loan, I could do a 5%.
Yes.
One of those I could do
Yes.
5%.
And here's how that happens.
Okay.
And you got to be careful with this.
Okay.
Is that you have two separate guidelines. You have the first, which is Fannie Mae.
Yes.
Or Freddie Mac.
Yes.
And then you have the second. So you might be told you meet guidelines for the first, but the second. For example, a Fannie Mae Freddie Mac program up to 631 or whatever it happens to be will allow a 620 credit score.
Really?
Yes.
Wow, that's surprising
Right.
to me.
And if you were putting 25% down or 20% down, and that's the only thing you were doing, it would probably take it. But because you're putting 5% down and you're getting that second, it probably won't take it. And I can tell you right now, the second won't take it.
Well, wait a minute. So when you're talking about the second, are you talking about a second trust?
Yes.
Or you are, because you're breaking it up into
You have
two
to.
loans?
You have to.
Okay, so explain how that works.
Fannie Mae and Freddie Mac are the only programs that I know of, that doesn't mean they're not out there, that will allow a combined loan to value, and that is the first and second combined of 95%. So as long as your first doesn't exceed that super jumbo Fannie Mae, it's called the jumbo conforming.
The 424 or the 631?
Right.
Okay, all right.
Okay, they'll allow a combined loan to value of 95%. So you can get the 630 or whatever it happens to be.
Okay.
And then you can get a second.
On top of
on
the
top of the
630.
first.
So you could buy a house for maybe close.
900,000.
Yeah.
You get a 625, let's say 625, and then you can get a 300,000 second and have a total loan of 925, which would give you about $1 million sales price.
So, and then if you do that, do you have mortgage insurance involved in there?
No, as long as the first is at 20% down. Now, some investors will only go 250 on the second.
Mm-hmm.
Some will go to 300. Some will go to 175. So you got to be careful that you're buying a house and there's a product for you.
So when I'm out there shopping and I want to buy a large home, is that first trust then going to look like I put 20% down?
It's probably going to be more.
Okay.
So you have
because of the second trust is going to
you
make
have a 900,000 sales price. You've got to get it back to a Fannie Mae product.
Ah, that's right.
So it's got to go back to that 600 and some. So your
Okay.
second's going to be bigger. Now here's your problem. If you get into over $1 million or like $1.2 million and you put 20% down, you're above that conforming limit.
Right.
And jumbo investors, 99% of them do not allow a combined loan to value anything above 80. Now
80%,
again,
okay.
my company deals with a certain amount of investors. None of them will allow you to go with a first and second that's above an 80% loan to value.
Oh, I see.
So
okay.
you got to stick it into a Fannie Freddie first and then do your second after
What
that.
in on the second trust, is there mortgage insurance on the second
No.
trust? No.
No.
And is the second trust, when you structure it that way, is that set up as a fixed rate payment? Is that
That's a good question.
Is it, or does it fluctuate? How does that work?
Well, you choose. Okay, so you're
Okay.
going to have, most of them are variables and most of them are based on prime rate.
Okay.
But you do have fixed. Like right now, I have a fixed 5.25 on a second that stays fixed for 10 years.
And then you figure they're going to refinance it out or pay it off
Hopefully
by that time. Is it a balloon at the end?
No, it turns into a 1-year adjustable.
And you can keep it. You don't have to refinance out of it, but it's going to change every year after 10.
Most of the time, you're going to refinance out of
Okay.
it because the value of your house is going to go up. You're going to try to get rid of it. You're going to try to pay it down. The average person keeps a loan for 5 to 7 years. So normally 10 years, you're going to get out of that somehow, one way or another.
All right, so figure that out. So, and on jumbo loans, they work for single-family homes. Can I buy a condo with a jumbo loan?
Yes, as long as the condo. Look, the condo is underwritten as hard as the customer. So your condo has to meet certain requirements, and they have to have certain investor ratios, and all the condo fees have to be paid on time. So you can't have too many delinquencies. So that condo is going to be underwritten just like an individual would be underwritten.
So then the condo association would then have to disclose like their bookkeeping and their
budgets
debts and
they
all
gotta
that
fill
sort of
out a
stuff.
questionnaire, and it's got to conform, and you're going to have to put the same 20% down if you're getting into the super jumbo.
Can you do, so on a condo, could you do an FHA jumbo or VA jumbo, or that again is guidelines?
Well, you're going to have a hard time finding a condominium at $600,000 that will be FHA approved.
Okay.
If it's FHA approved, absolutely.
Okay.
You can do it, and then you can put 3.5% down.
Okay. So another question that I would have is, let's say I own my own house, which I do, and I want to buy a vacation property or another property, an investment property. So if, let's say I owe, we'll just make up easy numbers. Let's say I owe $500,000 on my current house, and the vacation property that I want to buy is $400,000. So is it better for me to refinance my current home and take all of that money, as long as my house appraises, for $800,000, kind of a cash out, if you will, and go pay cash for the property in Florida or wherever it is, North Carolina, wherever I want to go, pay cash for that and then pay on my primary home? Or do I just do another mortgage on the second house? How does the bank look at me? What do you think?
Well, that's a very good question, and that would be something that I would do to get around certain issues. That's a question for an accountant.
Okay.
If you're talking a $400,000 sales price, you're talking a Fannie Mae, Freddie Mac loan.
Okay.
A second home, a vacation home, is 10% down.
Okay.
It's not 5, but it's 10% down,
Okay.
and the rates are basically the same.
Okay.
Except for tax ramifications, you might want to pay cash for that second home and take the primary residence tax advantage
Oh, yeah.
on your primary residence.
Oh, yeah, so that is an accountant.
It's a question for an accountant.
Okay.
But either way, I think it's easily done. When you're talking about a jumbo loan, super jumbo loan, most likely a second home is going to require 20% down instead of 10% down.
Okay.
And once you start getting over $1 million with your primary residence, there's different tax ramifications, and that would be an excellent question to ask an accountant.
Okay. All right. Well, we'll do that.
But it can be done.
Okay. And then if I have had a short sale in my past, that's a very common thing in our society today after the 2005, 7, 8 debacle that we had. What happens to me? Can I get a jumbo loan?
Well, it depends on which jumbo loan you're talking about.
Okay.
Okay.
Oh boy.
So Fannie Mae, Freddie Mac jumbo.
Okay.
Conforming jumbo, yes, you can.
Okay.
On a super jumbo, most of the time, if you have a foreclosure or bankruptcy, a lot of them say 7 years.
Okay.
And that's it.
Yes.
Short sales are treated just like foreclosures.
On the super jumbos.
Some won't allow it at all.
Okay.
And so that's why I say you need to check out the
The
guidelines.
investor. Okay.
Tell your loan officer exactly what your situation is. Because if you have someone that says, I got this great rate at 4% on a 30-year fixed rate super jumbo, well, that's great. Well, if your credit score is not 760, you don't qualify. If you don't have 12 months reserves after settlement, which is cash in the bank after settlement, you're not going to qualify.
Okay.
Are you self-employed?
Yeah.
Do they require 2 years tax returns?
Okay.
All right. Did you have 2 years ago, did you have a bad year, but you have a good year next?
Right.
So that scenario, you would want a program that only required 1 year tax returns. So quoting a program that the customer doesn't qualify for it kind of messes things up. And with super jumbo and jumbo, they're all different. So be very careful.
So let's go back to the not the super jumbo. Let's just say it's a Fannie Mae or a Freddie Mac product.
Right.
What do I have to wait a certain amount of time? Like, is it 2 years
It's 4
or 3
years
years?
on a bankruptcy, 7 years on a foreclosure, but
A short
and this
sale?
is debatable. If the foreclosure is in, or the property is in the bankruptcy, I go by bankruptcy rules, not foreclosure rules.
Okay.
So it really depends on the lender.
And
that
the
you're
short
talking
sale,
to.
how
The
long?
short sale is, again, a foreclosure, so
Oh, it is considered a
considered
foreclosure.
a foreclosure.
Okay.
So
All right. Well, thank you, Barry, for all your helpful information. That's very good, and we learned a lot today. Thank you for joining us.